Yeah, good morning, everyone. So we saw US market bouncing back, including Europe as well, post the news of Russia withdrawing troops from Ukraine border, and that has led to a sharp recovery in most of the international market. Even Asian markets are also seeing the similar trend, and which the Asian market, which closed before this news came, has are showing very good bounce back today morning. But if we see the futures of the US market, they are showing some softness. And we had the news came when Indian markets were open, and we had seen a very sharp bounce back on that account in Indian market yesterday itself. So we may not see similar type of gain in Indian market what is being seen in Asian markets. So apart from that, if we see oil is soft and is correcting from the peak of $96 and right now around $93. And aluminum is flat, copper is up by around 0.5%, iron ore is down by around 2%, and steel is up by around 0.5%. All are indicating some mixed reactions. But what we see that the intermediate problem which came because of Russia and Kazakhstan is now behind. But the key problem which was putting pressure in the market was the impact of high commodity prices on corporate results and also on overall economy is still continuing, and that will continue to remain in place. So we may not see this bounce back to be a very large bounce back. There it can have some bounce back, but the overall trend is still continue to remain sideways or under pressure. So we continue to remain cautious on the market. Now I'll request technical team to take up from here.
Yes, thank you. So good morning, all of you. This is Swati. Yesterday, we have seen that the Nifty has shown a very great bounce back rally from its 200-day moving average, which comes to around 16,800 levels towards 17,375. The Nifty has closed on very strong note, gained by almost 3% on an intraday basis. Now, going ahead, Nifty is likely to continue this pullback rally up to 17,470 to 17,500. This will act as a very strong resistance level provided by its 50 days moving average. Whereas on a downside, the immediate support is lies at 17,200. So as long as the Nifty sustains above 17,200, this bounce back rally is likely to be continued towards 17,500. If it's break that level, 17,200, then again we are going to witness profit booking or a selling pressure which might take a Nifty towards 17,100 to 17,000 levels. The overall view will remain a cautious on the Nifty itself, but the pullbacks rally can be traded with the strict stop losses. Coming towards the Bank Nifty, yesterday we have seen a very great bounce back rally into the Bank Nifty as well. Bank Nifty had surpasses all the three important moving averages, say 50 and 100 EMA as well on the closing basis. Going ahead, I believe that it has a potential to trade above up to 38,400 to 38,500. This rally can be sustained. If it's as long as it trades above the psychological level 38,000, the immediate support will lies at 38,000 levels. Below that level, 37,700, 37,500 can be seen. As I said, that already we have witnessed a great bounce back rally, but this rally can be fizzle out on the higher levels or at the resistance levels which are mentioned out. Uh, Coming towards the Nifty Finance for the today intraday purpose, the first resistance is placed at 17,350. About if it's cleared at level, then we can witness some bounce back rally towards 17,450 levels. Whereas on a downside, 17,150 is the first support level. If it's break that level, the index is likely to be dragged down towards 17,000 levels. So these are the important support and resistance level on the three indices. Coming towards the stock specifics, we have seen a very great momentum into the stocks as well yesterday. Uh, Coming towards the stocks, HCL Tech really looks very good. Yesterday we have seen a good bounce back of a rally from the important support level. I believe it has a potential to reach up to 1200 to 1220 levels on the higher side. One can take a buy call on HCL Tech with a stop loss of 1145 for a target of 1200, 1220. Second buy call, SRF really looks very good. Even we have initiated a buy call. So those who have missed out, they can again reinitiate a SRF call today also. It technically it has a potential to reach up to 25.7 to 2600 levels on the higher side. One can take a buy call at the CMP. Stop loss can be kept at 2380 for a target of 2570. I think that's it from my end. I request Nirav to take a call forward.
Yeah, thank you, Swati. See, on the derivative front, first of all, there was a clear signal yesterday, and even when everyone was bearish, we had given you a buy call. We had told that Nifty is likely to move up towards 17,000, 17,100 levels, and that is exactly what happened. Yes, we did not think there will be a 500-point move, but definitely there was a positive bias, and we gave calls for the same as well. Now, looking at the data, very likely, this rally can continue towards 17,400, 17,500 odd levels. 17,500 is a strong resistance area. See, in the last 3 months, Nifty is in a range of about 16,800 on the downside and about 17,600, 17,700 on the upside. And this has been a very dynamic range because in this range, there has been so many days where Nifty has seen 300, 400, 500 point moves in both directions. So very likely, this dynamic range will continue, and this range will continue because the India VIX is high. Even after yesterday's rally, the India VIX fell from 23 odd level to 20 only. So it is still high. So with the high VIX, you have to expect these 200, 300 point moves in either direction. But I don't see Nifty breaking the range very soon. Nifty can go up towards 17,500, 600 levels. That is where you book profits. And, you wait for downside or you go short. So this is how you play out this range. There will be weeks where both the lows and the highs will be touched, like this week. Yesterday it touched 16,800 levels, and now it is likely to touch 17,600 probably in this week itself. And this is what has to be expected. Now, coming to the stock specific front, as I said, good amount of buying has come into all the counters. Good buying has come particularly in the banking stocks because there were not many aggressive shorts, and whatever shorts were there were covered as well. So definitely banking is the one to watch out for still. It is likely to move up, and also financials look good because the financials haven't been performing very well in the last few days, but looking at the overall momentum and the open interest, I believe M&M Finance, Bajaj Finance, Piramal, all of these stocks have a good amount of long built up and likely to go up higher. So one can concentrate on these stocks. They can probably give you a good amount of return, probably 5 to 10% in a very short span of time. So concentrate on financials for the next couple of days. That's it from my side. I'd like to ask the fundamental team to take over, please.
CRISIL announced its results, which has improved. Revenue increased by 18% year on year. If we compare it to ICRA, ICRA's revenue grew by 12%, and for CARE it was flat. This 18% growth was led by research services, which is almost 70% of total revenues, and so research grew by 21%, while the rating segment grew by 10%. On EBITDA level, company has grown at 21%. One should ignore profit for this quarter because that has higher other income. So if we see CRISIL, it has shown the highest and most consistent growth among the three rating companies listed since last couple of years. So we are positive on CRISIL. Stock can outperform. Also, there is news that RBI has extended the deadline for NBFCs to comply with new asset classification norms, which were issued on November 12th. NBFCs will now be allowed to move to the new rules for recognizing bad loans till September, as against earlier deadline of March. So if certain criteria are not fulfilled, then these NBFCs will be put under PCA, similar to what was there, what we witnessed in some PSU banks till last year, that they were also under PCA. So among the three criteria, the major one that can hit some NBFCs is that they should have a net NPA of less than 6%. We noticed that among listed companies, there is only one company which may not fulfill this criteria and may fall into PCA. That is Muthoot Capital, the two-wheeler financing company. For the Q3, their net NPA was at 19.8%. So there could be some risk over there. That's it from my side. Thank you.
Good morning, everyone. Yesterday, India Glycol had their con call for the third quarter. We had seen that the company witnessed challenges during the quarter as they had a shutdown in December for 16 days, and also the unprecedented escalations in the feedback and energy costs, which has impacted the profitability, though it was quite stable, but there was not much improvement. So the reasons for this are that going forward, the company believed that the increase in the crude oil prices would be favorable for the company as it increases the viability for the biofuel. Also, they are very upbeat on the performance chemicals, which is doing well. Their grain-based bioethanol projects are in progress and expected to commission by April and June, as they are doing two plants. They're coming up with the two plants. They are also going into amine-based technology in future. Also, the reduction in the finance cost because they have repaid the debt from their the money they have got it from the JV with Clariant and also from their internal accruals has resulted well from the profitability. Going overall, going forward, we are positive on this company and believe that the better times are ahead, and the company would be in a better position to increase the profitability. We also attended the meeting with Fine Organics yesterday. What the company is saying that the current facilities would be maxed out till March 23. The new facilities are coming up, but there would commissioning from March 23 next year only, and there would be a gap between the demand and supply of around 1 year. They are also looking out for the new land to go for another expansion. Given this, we believe that near-term upside is limited on the company. Anyways, it is always trading on the higher multiple and rich multiples. So we are not, though the company is good and everything is fine, but from the stock price point of view, we don't see there is much upside in the near future. Thank you.
Yeah, Runjun, if you can cover Vedant Fashion, which is listing today.
Sir, Akansha does that, so I have not seen.
Sorry. I'll cover. Yeah, see, the Vedant Fashion is listing today. We had not recommended this shares. This is mainly in retailing, and the key brand is Manyavar. The key issue is valuation. The valuation was far stretch for the company, and we had seen recent listing of other retailers and all. So all shares are listing offered at very high valuations and are correcting. The key, another one of the issue with the company is the very high working capital days. The debtors they are quite high as they places their material in the retail chains, and the money which they get only when the product is get sold. So the debtors day are very long for them. So these two issue combined has not comforted us, and we had not recommended the issue. And we had seen comparatively lower response to the IPO as well. Apart from that, yesterday we attended the call of Hindustan Oil Explorations. This is the company where they do exploration of oil and gas. The key development here is that the one of their field is likely to get start soon. In fact, it has got delayed by almost over 1 year. It was supposed to start in last year around this time, but now it is getting expected to get start somewhere in the March. This is consistently getting bit delayed. Earlier it was expected to start in January, but now it is getting started in March. Anyhow, once this field starts, the scene of the balance sheet of HOEC will change totally. It is expected that this particular field itself at oil price of around $75 and the gas price of $6 can generate 400 crore of cash every year. So that is one of the biggest positive, and that will change the company outlook for the futures, as it will keep on generating such a high cash over a period of time. So we had recommended this stock long back when the prices were very low. But right now, considering that the oil and gas prices are at higher level, and there is always a risk in commodity of price correcting. So from here, we do not have any high comfort, though technically in March, once the field start, and again from 1st April, when the gas prices will again be revised up, this company is likely to benefit further, but we always carry a risk of these high oil and gas prices to correct in coming period. So overall outlook from here is neutral. If suppose stock corrects from here for any reason, then one can look at the stock. Apart from that, we also interacted with the management of Supriya Life Science. In fact, we had recommended this stock in our budget peak, and what we recommend right now is the prices are a bit lower from there, but one can look to average the stock at current price. The outlook continue to remain strong for Supriya Life Science for the coming period. Management has reiterated that they are looking at around 20% CAGR growth, and margins they are looking to maintain at around 38 to 40% because of large backward integration up to 5 level lower than the final product. So that has helped them to keep the margin very high. And going forward, they are going to benefit from the additional product which they are scaling up. They got 3 key products, but apart from that, they got around 35 additional product. Out of them, they are focusing on around 8-10 product to expand and grow faster. And because of that, they will be able to benefit in the coming years. And apart from that, they had put up a very large capacity recently, and that will help them to utilize this capacity in the coming period. Seasonally, Q3 is a weak quarter, and that's why we had seen correction in the prices of this year. But Q4 is a very strong quarter, and that will be the case this time also. So the near-term result is also likely to be good. But overall, if you see from a yearly perspective, they are likely to maintain 40% EBITDA margins and 20% growth. So long-term outlook continue to remain positive for the company. So that's all from us. Thank you very much and have a good day.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.